Imagine you're at a party where half the guests are celebrating like they just won the lottery, while the other half are crying into their drinks about being broke. That's our economy right now, and it's about to explode in the most spectacular way possible. I'm about to show you something that will blow your mind. For the first time in 30 years, we're seeing two critical economic indicators do something that has never happened before. And it's screaming that a massive reset is coming. Stick around, because by the end of this, you'll understand exactly what's on the horizon. Let's call this first piece of the puzzle the Great Divergence. Picture a graph with two lines on it. For decades, these two lines were best friends, moving together like a synchronized swimming team. But now, they're having the biggest breakup in modern history. The first line represents consumer confidence in the stock market, how excited people are about stocks. Right now, it's higher than a SpaceX rocket, at levels we haven't seen since the dot-com bubble. The second line? That's how people feel about their own financial future. And folks, it's lower than a limbo bar at a beach party. We're talking great financial crisis levels of despair. Think about this. People are simultaneously saying, the stock market is amazing, while also saying, my personal finances are absolutely screwed. It's like being excited about your neighbor's Ferrari while your own car is on fire. This has never happened in recorded economic history. And when something unprecedented happens, it usually means something big is about to break. Here's where it gets wilder. Let me tell you a story about two friends, real income and stock market returns. They used to grow up together, playing nicely in the economic sandbox. From the 1960s to 2008, real income was that reliable friend who showed up consistently, growing about 2.8% every year. You could count on him. But then 2008 happened and real income stalled, falling behind its old pace, disappointing everyone who believed in it. Meanwhile, stock market returns went absolutely bonkers. Since 2010, while real income managed a measly 50% growth, stock market returns exploded by 300%, even after accounting for inflation. It's like your salary stayed the same while your rich uncle's portfolio went to the moon. Except your rich uncle isn't sharing, and you still have to buy groceries. Here's the kicker. Back in 1999, you had certain expectations for your life in 2020. Those expectations were crushed. And it's happening again. The expectations people had in 2015 for today, they're about to be disappointed all over again. Now for the final piece, something I call the Savings Massacre. Remember when your grandparents used to save 13% of their income? Those were the days when saving money was as American as apple pie. Today, Americans save about 4%. It's like going from eating a full meal to surviving on crumbs. But here's the plot twist. While regular people's savings have been massacred, corporate profit margins have been climbing like they're training for Mount Everest. This isn't a coincidence. It's a giant economic seesaw. As one side goes down, the other goes up. And guess which side you're on? Corporate profits go to shareholders. And unlike you and me, who spend our paychecks on food and rent, shareholders take their profits and buy more assets, stocks, gold, real estate. It's a VIP club where the rich get richer by buying things that make them richer, while everyone else is stuck outside trying to afford the cover charge. So there you have it, a massive split between how we see the market and our own wallets, wages that can't possibly keep up with asset growth, and personal savings being squeezed to fuel record corporate profits. These aren't three separate problems. They are the three critical components of the same economic bomb, ticking right under our feet. The question isn't if it will explode, but when, and who will be left standing in the aftermath. All right, let's break down the next problem, the housing apocalypse. But wait, it gets worse. Let's talk about housing, the American dream that's become the American nightmare. For 60 years, buying a house was like buying a car. It cost about 4 times your annual income. Reasonable. You could plan for it, save for it, actually achieve it. But since the late 1990s, that ratio has exploded to 7 times annual income. It's like houses decided to bulk up by 75%. Think of it this way. If a hamburger used to cost $4, it now costs $7. Except we're not talking about lunch. We're talking about the biggest purchase of your life. And here's the cruel irony. Housing is the biggest part of the inflation calculation. So as it gets more expensive, it eats more of your income, leaving you less money to save, less to invest in those assets the rich are snapping up. You're stuck in economic quicksand. The more you struggle, the deeper you sink. Now, want to see something truly heartbreaking? The Hope Massacre. In the year 2000, 75% of Americans believed they had a good chance of improving their standard of living. 3 out of 4 people had hope. By 2010, that dropped to 50%. Half the country still believed. Today, only 25% think they can improve their lives. 1 in 4. That's not a statistic, that's a tragedy. We've gone from a nation of optimists to a nation where 3/4 of people have given up on getting ahead. This is a social crisis, and it's created wealth inequality levels we haven't seen since the 1920s, right before that little thing called the Great Depression. This brings us to the historical pattern. History is our crystal ball here. Picture a chart of wealth inequality over the last century. You'd see a massive peak in 1929, when the top 0.1% owned a giant chunk of America's wealth. Sound familiar? We're right back there again. But after 1929, something dramatic happened. Wealth inequality didn't just decline, it collapsed. It stayed low for decades, creating the most prosperous middle class in history. What caused this reset? Taxes, specifically corporate taxes. In the 1910s, corporate tax rates were basically zero. Then, policymakers cranked them up to nearly 40%. This squeezed corporate profits, brought down asset prices, and, here's the key part, it flipped the entire wealth inequality trend. Was it painful? Absolutely. Did it work? You bet. Then, in the 1980s, we did the opposite. We slashed corporate taxes. It was brilliant for economic growth, but it also set the stage for inequality to climb right back to 1920s levels. So, the coming reset. Here's the million-dollar question. What triggers the next one? History suggests it'll be taxes again. Corporate tax rates are at their lowest levels since the 1930s, while wealth inequality is at its highest since the 1930s. That is not a coincidence. The stock market is always forward-looking, meaning it might peak before taxes actually rise, just like in 1929 when the market topped out before the tax hikes began. You need to understand, this reset is coming whether we like it or not. The question isn't if, it's when and how. So, what to do now? Right now, we're still in the asset inflation phase. Stocks, gold, crypto, real estate, they're all still benefiting from money flooding into the markets. But, and this is crucial, there will be a moment when this trend reverses violently. When that happens, you want to be prepared. Here's your action plan. 1. Stay informed. Watch for signs of policy changes, especially around taxation. 2. Diversify smartly. Don't put all your eggs in one basket. 3. Build cash reserves. When the reset comes, cash will be king for buying opportunities. And 4. Invest in yourself. Your skills and knowledge are recession-proof. The biggest wealth transfers in history happen during these resets. The question is, will you be ready to benefit, or will you be caught off guard? Every crisis creates opportunity. The people who understand what's coming and prepare will be the ones who thrive in the new economic reality.